We're here in Monte Carlo for the Rendez-Vous de Septembre. For AMBest TV, I'm Richard Banks. And I'm joined now by Paul Brand, CEO of Convex. Paul, welcome.
Oh, hi Richard. Nice to see you again.
Lovely to see you again. So, Paul, Convex still stands out as one of the few truly new reinsurance companies to emerge in the last 5 years. Why do you think that is?
I think there's a number of reasons. I think it helps if you've done it before. So timing also helps. We built a great team very quickly. And then also we've, as I said, timing, we've seen a significant hardening of rates right from the beginning of our journey and still happening today.
So as you touched on there, in many ways it's been perfect conditions for a startup. But we know that hard markets don't last. How does one prepare for evolving market conditions?
Yeah, I think that's a really good question. We're just trying to do a couple of things. Firstly, expense management. So I think the industry has it's got an OPEX problem. So we want to use technology to essentially drive much better operational outcomes. So, so not bad outcomes, but at a much lower price. So I think if we use our lack of legacy to essentially drive that operational efficiency, that's a really good start to being in a softer market. And then you've got to get closer to your clients and you've got to think more about actually how your portfolio has resilience. And we're building Convex to absolutely go through all phases of the marketplace.
Here in Monte Carlo, always lots of talk about portfolio management and appetite for certain types of risks. What's your take on the current conditions?
So, clearly the conditions have improved a lot between 23 and 22 as you look at the property cat space and the property space more generally. But you've seen a number of years where carriers have not been earning their cost of capital. And simultaneously they've been making their clients unhappy. So I think there's still a trajectory on upward pressure on pricing because we are seeing a lot of losses. And even though in 23 there's not been major cats, you have seen a number of smaller cats actually impact the companies in the sectors.
So in general, how have the reinsurance industry managed the hard market so far?
Well, I think we're still in it. So there's a bit of what happens next. I think that it's probably arguably could have moved faster and that might have helped, but for lots of reasons didn't. I'm not one of those, we both buy and sell reinsurance. I'm not one of those who goes, last renewal was painful or in some way or another was people were treated badly. I'm not in that camp. And I think where you've got transparent discussions, when you've got essentially data-led underwriting, you get to the right point. The shareholder is a stakeholder in the business as well, and they have to. It's reasonable for them to have return expectations. We've not met those, and we need to start changing that.
So Convex hasn't necessarily followed the developmental path of the classes of 2001, class of 2005. Where does its growth path go now?
So we're about 2.5. We're going to be roughly around $4 billion as we end 2023. That gives us about a 2.5% market share of our addressable market. Depending on prices, depending on how long the hard market lasts, we can see a trajectory where we can go from 2.5% to 5% within the medium term, and that's largely through classes of business that we're already in. That's not using new territories. That's essentially using the underwriting talent that we've already got in the organisation.
Paul, thank you very much indeed for joining us.
My pleasure. Thank you very much, Richard.
For AMBest TV, I'm Richard Banks.